purchased those tickets at a very discounted rate and would have saved over $100 per ticket. But how could you possibly know what the best action is? Unless, of course, you had a SeatGeek forecast, which, as you can see in this case, accurately showed how ticket prices were going to move for this event. So just to reiterate, we are operating in a $15 billion market in which there's not one company that's focused on analytics except for us. So right now it's pretty clear what our value proposition is. Will ticket prices rise or fall over time? And the way we solve that is through a patent-pending algorithm that accurately determines that answer. And for consumers, we can help them save money, telling them when is the optimal time to purchase tickets. And for ticket brokers, we can tell them when the market's going to reach its peak, enabling them to maximize the amount of profit that they gain from selling their tickets. So how do we come up with this model? Every day, we crawl all the major secondary ticket markets and pull in all this listing and all this transactional data into this massive database. And in addition to that, we pull in every factor which we know to drive ticket prices. These can include things like the venue, the weather, the pitching matchups, the time of day. Literally anything that we think can affect ticket prices, we'll pull in and see if it is statistically significant when we analyze how ticket prices move and we interact it against ticket prices. And so the output is an econometric model that outputs with 80 to 85% accuracy, depending on the event type, how ticket prices are going to move. So we built a ticketing site that is different than any ticketing site that you've seen before, because we give consumers real information to help them save tickets. As you can see here, we have a historical graph showing how ticket prices have moved up to this point. In addition, we have forecasts showing here's how ticket prices are going to move from here on out. And so that's the analytic part of the business. There's also something called aggregation that we focus on as well. We aggregate tickets from all the major secondary ticket markets. So no longer do you have to go to StubHub, and then to eBay, and then to RazorGator to find the best deal. Just go to SeatGeek and we'll tell you, here's all the available tickets, and here's where all the best deals are. We'll lay out all the listings on an interactive ticket map, and actually color code them based on the quality of the deal. And so how do we determine the quality of the deal? Well, for every major league stadium, we've had an outsourced team in India dedicate thousands of hours to pull in the face value information from all these stadiums. So when we say something's a good deal, we're saying that it's a ticket that's 80% of face value is a good deal, but a ticket that's 200% of face value is a bad deal, irregardless of where those tickets are in the stadium. And you can see here we've colored the green dots as good deals and the red dots as okay deals, which is our code for bad deals. And this is, as you can see, in your experience buying tickets, this is something that's totally different and that no other company can really offer. So how does SeatGeek make money? We earn between 7 and 10% when users purchase tickets through SeatGeek. We see an average transaction of around $254, meaning that we're making about $20 per sale on our site. So one way of conceptualizing our business is by looking at a nice parallel in the airline space. About 4 or 5 years ago, or maybe even longer than that, people used to actually go to American Airlines, to Continental, to all these other airline sites to buy their tickets. And now people have wisened up. Instead they go to Kayak, or they go to Mobissimo, or they go to another aggregator that tells them, here's all the available flights, and here's where you can find the cheapest deal. And one company I want to draw your attention to is a company called Farecast, which launched in 2007. Farecast entered this really competitive space of airline flight aggregators with only one differentiating factor. They told users where ticket prices would go, and they had a predictive algorithm that helped people determine when the best time to buy tickets for their flight. Farecast was an immense success. Within 24 months, the company sold for $115 to Microsoft. And now Microsoft has rolled it up into Bing Travel and made it the cornerstone of their travel search. The secondary ticket market is about 5 to 6 years behind this. Only now do you start seeing sites getting involved in aggregation. But as I said, there's no company that's involved in the more interesting part of the business, which is not just aggregation, but providing analytics to the consumer. And this is a $15 to $20 billion market, growing at 20 to 30% year over year. So this slide really illustrates how wide open the space is. The current aggregation opportunity is gigantic, and the current aggregation market, you can see that it's barely even started. And so we think we have an opportunity to gain tons of market share and become a $100 million business. So the question that you should be asking yourselves is, how are we going to acquire users? We have two main pillars for user acquisition. The first is through rev share partnerships with sports, media, and music sites. There are a number of sports, media, and music sites that are looking for an integrated ticketing solution that can help their users purchase tickets within a few clicks. As a SeatGeek partner, these companies would earn a generous share of our revenue whenever their users purchase tickets through our site. And for us, we've thus far spoken to a number of different partners, and we have a number of partners in the queue, but we've actually just closed a deal with Beckett Media, a company which many of you are familiar with if you ever collected sports cards and merchandise. And Beckett runs a high traffic website, and SeatGeek ticketing links will be throughout the site over the upcoming weeks and months. We're also currently integrating with literally the single biggest sports property on the internet. And that's, we expect a go-live date of that in a couple weeks. And these partners are going to generate hundreds of thousands of unique visitors to our site on a month-to-month basis. And what's beautiful about this model is that it's relatively risk-free. We only pay out to these companies when these users purchase tickets. But SeatGeek isn't just focused on getting the big bloggers and the big sites on board. We're building widgets, which are products that can sit on even the smallest blogs. These widgets will generate interesting content, like the one you see on the right, that bloggers would input on their site for free, but now they have an opportunity to make money when users buy tickets through them. And importantly, our partnership program and our widgets allow us to win in SEO. The existing ticketing companies that are out there are only focusing on how to optimize their own site. SeatGeek knows that in order to win at SEO, you need to generate thousands of backlinks to you. And these partners, and this extensive network of partners that we're building, are planning on doing just that. And we think that we can leapfrog companies that have been in business for 5 to 10 years in SEO through our extensive partner network. Another big pillar of SeatGeek user acquisition is data-driven PR. We sit on a treasure chest, a gold mine of consumer sentiment data. When a player gets traded, when a player's out with an injury, when a team goes on a losing streak, when a musician releases a new album, we can definitively say, here's how fans feel about this particular event. A great example occurred a couple weeks ago. The New York Post was looking to write an article on how New York City fans feel about the Tracy McGrady trade. Our awesome PR firm, Launch Squad, connected the two of us together, and we supplied them with some data about how ticket prices jumped the moment that Tracy McGrady was traded to the Knicks. The New York Post loved the article and ran a nice piece about Tracy McGrady, replete with statistics from SeatGeek and also quotes and mentions about our business. A few days ago in the Wall Street Journal, there was an article in SeatGeek that focused on how ticket prices are plummeting in the NHL after the Olympics. No one knew this information. SeatGeek dug it up, and we fed it to the Wall Street Journal. There are so many stories in sports on a week-to-week basis, and in music as well. SeatGeek doesn't ever have to be the focal point of any of these stories. We just have to supply our data and be around all these big stories. And our long-term goal is that reporters will start picking up the phone and calling us whenever they're writing an interesting story, because they know that we have data that nobody else has. I don't want to dwell too much on some of the accolades that we've gotten since our launch, but I think one that's worth mentioning is the fact that we're nominated for South by Southwest Top Technical Achievement of 2009. Let's just say 2009. I'll be flying down there tomorrow, hopefully to win the award, but it's great to see that we're recognized already as being a leader in this analytics space and defining a new market. So this slide shows some of our projected revenue for 2009. Thus far, I spent the entire time talking about the customer-facing site, which you see above, but there's also two other products that I wanted to introduce right now. SeatGeek Ticket Portfolio is a product for season ticket holders. It helps them understand how to price, manage, and sell their tickets. Season ticket holders spend thousands of dollars buying their tickets every year. Of course, they're willing to spend $8 or $9 a month having interesting or detailed information on which tickets in their portfolio are worth selling and which are holding on to, and when's the best time to sell those tickets. Literally, they can sell one of those tickets and they can make back their money, immediately. SeatGeek Pro is a service that we've built for ticket brokers. Ever since we launched SeatGeek, brokers have hounded us. They want a pro product because they're making $500,000, $1 million in revenue every year. And this is a game-changing product that can change the way that they operate their business. So we'll launch SeatGeek Pro in the upcoming months, and we'll charge a much higher price point for the service, given the fact that it's such an invaluable service for these ticket brokers. We talked about a price point of about $1,800, and as someone talks about living navel to navel with the ticket brokers, we've gotten in the ticket broker world, and we understand our market really well, and we know that this is a product that they want and can generate a ton of revenue for both us and them. So here's our 3-year financial forecast. You can see that, as one of the takeaways that I'd like to share is, if you look at how the business will grow over time, you can see that the revenue from our company scales quite nicely, whereas the expenses don't scale nearly as proportionately. We'll be profitable, potentially, according to plan, in 2010, and we really hope to open up that profitability in the upcoming years. A little bit about my co-founder, Jack, who's unable to make it here tonight, and myself. The two of us have founded 2 businesses before, which we've sold successfully. Both of us met when we were at Dartmouth. Jack was actually enrolled in MIT's PhD program in economics, and luckily for both of us, he's decided that he'd rather apply the same sort of tool set that he'd be using to study finance to the interesting secondary ticket market. And so he leads up our forecasting team. He works with a number of our PhDs, and then I have some experience in building high traffic websites, and I lead our web development team, and now I'm currently focused on business development. Here's a bit about some of our employees. You can see that we have a lot of developers on staff right now. We're also looking to bring on some social media, marketing, and product management interns. So if there's anyone in the audience who would be interested in a position like that, please follow up with me after the speech, and I'd love to talk with you further. And then a final bit on some of our investors. We are angel funded at the moment. We have a number of successful investors who have exited companies before. Everyone who's invested in SeatGeek has experience in operations, and we're looking to round out the team and to bring on some sort of professional investors and people who have done it before. And so it's such an exciting opportunity to be here in front of all these investors, talking about our business and seeing whether there's an opportunity there. So that's all that I have on SeatGeek today, and I'd love to hear some of the questions from the investors.
My first question, if you go back to the revenue slide, you have a forecast of growing your revenues over 10x from the first quarter of this year to the second quarter. What's driving that? I would imagine that revenues are a function of traffic.
Yeah.
And to grow traffic 10x from one quarter to another, something has to happen.
So we see, if you look at some of the partners that we're speaking to and some of the partners that will close over the coming months, these companies are such high traffic sites that they'll send us literally hundreds of thousands of uniques a month. So you close a couple of those deals, and you're able to really grow traffic.
So you're dependent on closing deals.
A big part of our business, certainly, yeah. See, the affiliate program is very important.
What don't people like about it?
About SeatGeek?
Yeah.
I think there's always a bit of reluctance when dealing with a startup. I think one of the things that's exciting about what we do is that we're willing to go 100% to get the deal done. And some of the big partners that we speak to, we talk about doing the integration for them. But
no, I meant who in the ticket industry doesn't like what you're doing?
Who doesn't?
This is a threat.
Sure. Oh, sure. Sounds good. So the question was, if I understood correctly, who are we a threat to in the ticketing industry? It's a good question. You know, I like to say that we help everybody. We are providing traffic to a lot of the secondary ticket markets, and I think at first glance you could see that those are the sites that might be threatened by what we're doing. But I think just the fact that we're providing traffic to them, we're funneling traffic their way, makes them more accepting to what we're doing at SeatGeek.
I'd like to ask, you're focused on the algorithm as the tool by which your company is driven?
Sure.
Does it always work? Are there circumstances where the algorithm does less than 80 to 85%? And what stops anyone else, a lot of smart people, a lot of PhDs,
Sure.
from writing a similar algorithm?
Sure. So I guess two parts of the question is one, where are we consistently wrong? There's no area where we can define that we're consistently wrong, because if there were, we would create an algorithm that actually took that into account. But the other part of the question was around what's the defensibility of the algorithm in the business. It's really the data that we sit on. We've gathered data for a full year, and that data can only be gathered in real time. So there's a chance that another company can be starting right now to do the same thing that we are, but they'd be a year behind in terms of gathering data, and it would take them that much longer to run some of the analytics. And along those lines, a big part of what we do at SeatGeek is convincing the world that we're the leading company in the secondary ticket analytics. So we work with one of those major sports leagues and help them price tickets. And there'll be press releases about that in the upcoming months. And that's exciting because it shows that we're the market leader in the space, and we're the ones who understand it better than anybody else. So a big part of it is marketing.
What's the number in terms of cost that a good IT company would have to put in if they wanted to build your algorithm or a competing one, since it exists in parallel companies already?
Sure. So again, I think the biggest cost is around time. That it takes a full year for them to gain the amount of data that we have in order for them to come up with an algorithm like ours. And in terms of the cost, they'd have to definitely hire statisticians and PhDs and people like that to be able to dig through the data and analyze it. And if you look at why a company like StubHub doesn't just roll this out, it's because their product focus is not on that. They'd have to bring on new talent. It's diversion for their business. So a lot of companies aren't willing to take necessarily that risk of getting involved in analytics there.
I have a question. I want to go back to where Charlie was going with the model. You guys are raising money right now?
Yes.
How much?
We're looking to raise up to $1 million.
Okay, and in what time frame are you trying to get that? I mean, as soon as possible, right?
Yesterday? No.
Okay. But so, if I would want to dig into the model with you, particularly the traffic building model, because the revenues are just a function of the traffic build, right? But here's what's troubling to me. Your revenues are 95% second half of the year weighted, right? So if I'm an investor and I'm looking at that, unless I got really confident of the pipeline deals, I'm probably going to have trouble buying into those numbers, right? And 70% of it is Q4.
Yeah, and I'd like to preface it with the fact that we literally have not done a single bit of marketing until about a month ago. So we hadn't even started the process, and I understand your concern, and it's something that we'd love to sit down with investors.
It's about business development. So one of the things I want to understand is how much, who are the prospects on a bottom-up perspective, on a business development perspective, what kind of traffic will you nail per prospect if you get them? What's the weight between the widget-driven and the business development deals and that kind of stuff? But then, moreover, if I'm considering this from a venture perspective, and I'm looking at the growth curve, you're talking about on a sequential, kind of quarterly sequential basis, dramatic growth through year 1 and year 2, and then relatively speaking, it's a 2x between year 2 and year 3, which suggests to me that either your market's not that big, or you're not thinking about it correctly, unless something else dramatic happens. But that's a little frightening from a venture sort of point of view, right?
I'd like to take an alternative approach to the numbers. If, a venture investment is, it's a transaction like the transactions here, right? Like, we're the buyer, you're the seller. And we're looking at the same set of numbers, but right now you're selling. And the question is, if the product is built, and if a bulk of these revenues are basically driven by business development partnerships, i.e. you, and you had a strong potential to make $750,000 by the end of the year, I would ditch the marketing person, cut down as much as I could, hold my nose, and at the end of the year, you're gonna have $750,000 in the bank, and you're not gonna need venture guys like us to take a big chunk of your company, and so like, you know, I think part of the concern is sort of if you're just about to make a ton of money, and you feel strongly about that, why even raise it all?
There's some good points there. You know, the up to $1 million doesn't mean that we necessarily want $1 million tomorrow. It's about the fact that we're looking about, we're trying to think what our timeline is in terms of investment and what makes sense. One point that I do want to bring up though is another key about, and it's not just web traffic that will affect that number right there. A big part is conversion rate, and you know, if you look at the difference between 2%, 3% conversion rate, it's a massive difference in terms of what that means to your site. And I think that's something that we plan on optimizing to a large degree over these next couple of months. One of our investors is a guy who's literally a world expert in A/B testing and that sort of thinking, and enables you to really improve that conversion rate and boost those numbers to that degree.
What communications PR program do you have in place that proves the validity of the algorithm working?
So
Why should a customer believe you?
good question. So we look at what Faircast has done. I think that's a great example for us. I know that Faircast at some point hired an independent firm to look at their algorithm. And I know another thing that they did, which was really successful. Well, it wasn't a successful idea, but it proved that they're willing to put their money where their mouth is that they launched an insurance program. And there's some legal risks there, and it's something that we thought about, but we would do it just to prove that we're confident about our algorithm.
Can you tell us how you'd use this money if you could raise $500,000?
So-
And how it would drive those numbers to be more believable?
The biggest use of funds is to hire on the technical side. We want to bring in more developers. We also want to bring in a full-time statistician. And if you look at our PR plan and what we're trying to do, it's constantly feeding the media with information, and that's a time-intensive process. We look at what Faircast did, and Faircast successfully brought, PR was a huge driver for Faircast's growth. And they did that by bringing on a guy who's full-time, who's living in the data, and feeding the media with information.
You know, if you have an 80% efficiency, why don't you just trade your, you know, you can make $1 million next week. Buy the tickets. You know. Curious.
There are some ways in which trading tickets on the secondary market diverges from trading a stock. The most important of which is that there are extremely high transaction costs on buying and selling tickets. So to buy a ticket and then to sell it on StubHub, you're looking at a round trip transaction cost of like 35%. And so that doesn't make it quite as attractive. It's not that you can't make a business there, but we look at what will make a $100 million business and what would make a venture, extremely exciting venture for the two of us. And it's not being a ticket broker, even though we think we can do it better than anyone else out there.
One, trying to think about the way you laid out the slide and stuff, like, to me, the whole idea and business concept makes some sense. I'm not convinced that it's a venture investment necessarily, but one of the things that I think that would help us is if you made the connection between the $15 billion addressable market opportunity and kind of the unit economics of how you acquire a transaction. So that you could probably do that in one slide, where you're saying, if I apply X strategy, this is how I acquire traffic, this is how I impact the conversion rate, this is the transaction dollars related to that, and my share of those, and this is how we build across the addressable market. Because the rest of it, it's just modeling, right?
Yeah.
So that's what I think. If you added that one slide, that you would probably blunt a lot of the questions or criticism or whatever.
Sounds good.
To that point, what is the average ticket out there in the universe, and what do you expect to make on the transaction?
Average ticket transaction on our site's $254, $20 that we make.
What you guys have built is a tool for smart people. And most people are lazy and stupid. And if you look at the most successful businesses on the web, Twitter, just type in 140 characters. Can you just barely do that, right? You know, Google, let's just type in a word, get it. Most of the clicks are not coming from the most intelligent aspects of the audience. My concern is, and I bought tickets that I knew that I was being stupid about, that I just said, oh, you know what, whatever it is, I'm just going to pay. And my concern would be that the too few people who are in the expensive ticket buying audience, for example, like if first round's trying to impress an entrepreneur, and you know, we're trying to close a deal, and we got to get, you know, floor seats. Probably not going to wait. We're just going, whatever it is, we're just going to, you know, bite the bullet. And you know, the number of people that are really optimizing a transaction, which you provide an awesome tool for, is potentially a really small percentage of the market.
And getting back to that, I think that even if people ignore the forecast, like first round light, they still want to know, okay, I mean, you could be really lazy and look at our site and say,
We wouldn't go to a site necessarily to optimize. We just, what is it, you know, go to wherever Google sends us or something.
so when, I just want to ask, if when first round take, you know, when you guys book flights, what do you guys use? Do you go to American Airlines or do you go to like Orbitz or Kayak?
I go to Kayak probably.
Right. So isn't the same logic apply to secondary ticket market? You're going to put down a lot of money. Why not go to an aggregator and save money in the process?
I don't go to Faircast.
Or sure, so you go to Kayak, right? But I mean, an
I want
aggregator.
the cheapest ticket right now, I'm not that stupid.
Yeah.
But if I know I have to build,
Right.
if I book a trip, I'm not gonna wait 2 weeks and make a market bet to possibly save 20%.
But yeah, I definitely understand what you're saying, and I think a lot of it comes down to how we position SeatGeek, where it's even if you aren't going to follow the forecast, you're still going to do better than if you went to StubHub or any other site out there, right? Because we're still showing you what's available at any given time from all the major markets. At least as good. Yeah,
So maybe the value then
that's a really good point.
is as an aggregator, because like for example, like that slide that you put up where there's like the stadium and all this, like I thought that was all. I was like, oh well, I'd go to that. I don't see that anywhere else. And then it's an aggregation play, which means this whole prediction is it like a little bit of a head fake to an investor where I'm talking about, you're talking about that, but actually the much more simple story is you don't have time to go to 8 different sites to figure out where the best seats and tickets are. Just come here. This is a really simple story.
Yeah, let's stay on the issue of the customer for a moment.
Sure.
Do most men buy tickets or women?
We did a survey and found that most of our users are men.
And how much are they looking to save? At what point are they satisfied with what they've saved?
Are they satisfied? Explain that.
I mean, if I save $10, will I say that's another time I want to come back to your site? Is that enough? If I save, yeah, everything is behavioral in this case. It's all about what am I thinking? Do you know the answers to those questions?
Well, I can say from our data, what we see is that ticket prices vary actually more than you would think. So you're not, and you look at tickets that are more expensive than you would think too. So we're talking about an average variance of 40% and tickets that are selling for $200. So it's not like you're just going to save $5 or $6.
People save thus far as an average.
That's hard to say. I don't.
Why is that hard to say?
Yeah.
That's just it. That's what I want to know. What kind of research, studies, and analysis associated with your customers' behaviors can you assume, anecdotally or whatever, to make that kind of
Well, conceivably, you
answer?
have the data, right? Because if you're making a case that they start out with you, and that they also make the ticket purchase with you, because you need both ends of the transaction, right? You need them to come today, you need them to come 2 weeks from now to actually complete the ticket purchase.
Can't hear you. Oh, sorry.
I was going to say, conceivably, you should have that data, because the pitch is, I come to you to chat, right? And then I come 2 weeks later when I know it's a good price, and I complete the ticket with you. So you should be able to see the same person.
Absolutely. So
If you would get a partner, StubHub may never do it, but a partner of some other ticket aggregator that doesn't do that, you compare your data to them, you could have a huge selling technique. Our customers have saved $17 per purchase. You should be able to figure that out. That'd be a fair assumption.
In answer, what you really should answer is, first of all, there are 4 other sites, aggregating sites, that are doing millions of dollars in revenue. And so there's an established market for the aggregating portion of what he's doing, right? So,
Well,
you know,
well,
optimize, right?
No, I don't think that's actually the case. There's a couple sites that are doing a tiny bit of revenue, and there's one large site that is trying to do aggregation and hasn't necessarily hit a home run yet.
Okay, well,
Okay.
maybe you have better information than I do. But they've raised,
Yes,
I wanna say 20 or 30 million in aggregate.
17.5.
Okay, so whatever it is, you know better. But, my gut is saying there's probably, I've used Fan Snap or.
We don't use that name.
Yeah, I mean, I've used some of the other sites and, because I'm really geeky about that. Don't go to games that often, so I don't know what the prices are. But in any kind of case, I do think there's a market. The bigger question I have is, yeah, the algorithm's interesting, but I think it's that space feels like it's kind of done. The other guys, are they doing? I think some of the interesting pieces are your marketing. Have they started to maybe the widgets and everything? I think that's kind of cool. You know, that's differentiated. But I think you can start off saying, hey, you've got an established opportunity. I don't think you should. I mean, that's worse to say, oh, yeah, I've got 4 competitors, they don't do any money, they don't do any revenue, right? I mean.
Yeah, no, that's true. That's true. I guess what I wanted to, I mean, there's a couple slides that I wanted to loop in with to sort of close the conversation here. Is the sense that, first of all, if you look at the airline space, you can see that there definitely is a possibility for multiple winners. It doesn't have to be a winner-take-all market where it's us against FanSap and it's a land grab. If you look, you saw the slide where we looked at the total addressable market and what aggregation has done so far. It's just starting. The biggest barrier is getting consumers familiar with the prospect, and we think that that's something that we can do. And if you look even at what Faircast has done, they had that one feature which is forecasting, and that alone was a differentiating factor. So I definitely see what the point, and the point is well taken. But I think we can differentiate ourselves sufficiently from what they're doing and really build a business from it.
Yeah, it's very disconcerting to me that a company that specializes in analytics, a company that specializes with PhDs from all these Ivy League universities, hasn't done one bit of research into understanding the analytics associated with behavioral characteristics of the people who buy their products. It's really fascinating. And I'll tell you, it's really a lot of what happens when young entrepreneurs start believing their own PR, start believing that they really are that special. They forget that they are competing every single second of every day, and that you don't even have the answers to those questions is very disconcerting.
Brian's actually this guy. Don't let him think. Yeah. One last point, actually, and this is something I see a lot of startups hang on, and a lot of people do this in the email space, where right after Daily Candy got bought for $100 million, or one of those sites, everybody said, well, if Daily Candy can be bought for that money, well, look at us. The little point on the graph is sort of moved over from where it is on the other slide, but after about sort of late 2008, none of that counts anymore, because before the financial crash, acquisitions in 2008, if you look at where the public market is since then, and you devalue this thing, you're saying, so I don't hang on that and go, well, for Faircast was $100 million, it wouldn't be a $100 million business today if Microsoft were buying that necessarily. So I would more build it from the bottom up and say, here's how much money we can make, the unit economics argument, than say, hey, a bunch of people were bought.
I just want to follow a point that I said before. Right? When you're an entrepreneur and you're out raising money, think about the input that we've just provided to you, right? Free. You can go around as an entrepreneur and visit all these VCs, all the angel groups, and we're there to target you. That's our job. And we're going to tell you where it hurts, where it doesn't make sense, where it doesn't feel right, where you've missed things. And the best part about it is that it improves what you're doing.
Thank you, everyone. So what we're going to do next, Russ, you can stay with me. It's not easy being an entrepreneur, but it's very exciting. If there's any other feedback, any other pearls of wisdom and constructive and encouraging feedback you might like to give Russ, now would be a good time.
Yeah, I actually think it was a pretty good presentation for the stage of where it was, and you know, if you think about all the things that, you know, I think it's pretty simple, straightforward. You know, you don't know, like Charlie was saying earlier, you know, a year from now it could be something completely different. But you've got, I think you kind of underpitched, if anything. You've got proprietary content that no one else might have. You've got, you're attempting to get proprietary distribution that perhaps a lot of your competitors might not be able to get. And, you know, your cost to doing that is really low. And you've got a business model behind it. There's a lot to be said for all the things there, and practically all the companies that I back have all those traits. So I'd say, you know, I'm not saying we would be an investor per se, but you know, you're going to fall in the top quartile of things that we look at, and you know, I want to encourage you to keep on going, because you've got great bones, if you will, of your business, and you know, the rest of the stuff, projections, and, you know, that's stuff that you can touch up and the like. But I think generally you got a good opportunity. And
I want to add,
I'm not just saying that either. I was going to
Yeah.
say that anyway.
I would echo Steve's sentiments. I think, you know, you have a nice, a good style. You know, you're confident and comfortable on your feet. And I thought the organization, the presentation was good. I would reiterate the one comment I made about trying to get that equation right, because if you prove that, then you've given me a lot of confidence that you're going to spend money to address the biggest risk that you have. Like, you guys are clearly smart guys. You've identified a good market. You probably have proved most of the technology risk. You proved some of the, I think there's some evidence that the market's there, but you haven't proved to me that you know how to address the biggest risk, which is, you know, the business ramp, right?
I would also show off, if you can, if you do know about the expense side of your business. The projections are obviously made up, and they always are made up, but you probably at this stage know a lot more about why you would want some amount of money and what you would do with it. So it's okay to answer up to $1 million, depending on what valuation we get. That's an okay answer. But so if I got $500,000, I would spend it in the following ways, and these are what I'm going to get for it, how I'm going to improve my business, and I bet you know that. So I would put that up front, because the early stage investors know that sometimes the entrepreneurs don't even know that yet, but you do, and I show it and I brag about it.
I want to point something out. As soon as I saw Russ was here, I ran up to him and wanted to give him a big hug. I saw him give the presentation when he arrived, I guess after you got out of Dream It. And it was one of the best presentations we've seen. Now, remember, you know that great line, it's all about timing. Well, when you come to the New York Angels, there's about 75 of us, and kind of look at all the deals, 95% of the deals are pre-revenue. So somebody walks in, it's a great idea, I like you, like your background, the idea looks good, we do about 20 minutes of due diligence, it's okay, we'll write checks. That's the goal, but remember, it's pre-revenue. So there's this luxury when you're pre-revenue, you don't have to deal with questions that relate to after you're making revenue. So that's the time frame that angel investing usually takes place. So the kinds of issues that I raised about why aren't you using this after the fact certainly are reasonably disconcerting, but I wanted to put money into his company.
And you still can.
He didn't mean that, though.
See, investors have a herd mentality.
The only thing I thought was missing, and again, as Brotman said, I thought that your delivery was very good and your response to the questions was very good, calm, and didn't fight anybody back. The one thing I didn't see, and clearly this was a presentation to investors, if you will, but I didn't see anything in there, and so it wasn't a sales presentation to a partner. But I didn't see, there's nothing in there that shows how compelling it's going to be to a partner, and why everybody else that's really, that you're relying on to make your business happen is going to want to be part of this, and why, what the revenue deal is for them and that sort of thing. And sometimes when if you can show how exciting that is to a potential partner, that's something that gets an investor interested.
I think
One
one,
more final point.
I think one thing that I would have liked to see more too, both in the presentation and actually as part of the site, it sort of reminds me of if anybody's ever gone to any one of these group buying sites like Groupon. Groupon's got this running total of how much money we've saved our customers, and it's getting to be a really, really big number. I mean, I think the pitch here really needs to be, we're handing out money, right? That come to us and we're gonna save you $15 or $20 or $30 or whatever it is, and we know what that looks like. Because I think if you look at this space, this is a very crowded space, and I don't want to use that as a cop-out like a lot of investors do, because you're not necessarily doing the same thing as a lot of people with ticket space are. But if you Google for tickets, there's a ton of people buying ad traffic, there's a ton of people optimizing for it. You gotta get out in front of them. If you go to a stadium and you're looking to buy a ticket, there's scalpers that are like pushy and they're trying to get in front of you. I think that's some of the DNA that maybe needs to get injected of like, you've got some quant people, some developers, like who's gonna really push this forward? Not some junior social marketing, 1 year out of PR kind of thing, but this needs to be the sales nature of this business needs to be turned up from like a 3 to like an 11.
Okay, at this point, we'll open it up to the audience and feel free to ask both the panelists and the entrepreneur whatever questions you may. Brendan has a microphone, so if you wouldn't mind just raising your hand.
I'll start to my left and I'll go to the right.
And go ahead, you seek them out.
Good job, Russell. Dealing with the American Idol judges is rough here. I think we found the Simon, Tim.
Hi, Russ. Great presentation. Just to give you a little background, I used to be a supervisor with the New York Yankees ticket office. And they're actually recruiting me back to be the premium sales ticket person for the Yankees. Now, one thing I looked on your website last night, and I went into May, and I found the Mets versus Yankees. And I saw the valuation was 250% over what the face value of the ticket is. So how are you looking to kind of compete against, now as working with the Yankees, we used to, A, we hated scalpers. B, we used to tell people, we used to value out what the ticket market would be doing and hold back tickets for game day sales. So how would you compete against that?
Sorry, I just want to make sure I understand the question correctly. So the question is around specifically that some teams hold back some inventory and then release it later? Yeah, I mean, that certainly happens. It doesn't happen, at least in our experience, that much. And if you look at like a game where there's a lot of people want to go to an event, people want to get those tickets immediately. They don't want to wait to see what's going to happen at the stadium level. Another thing that's worth reiterating is that people have this misconception that all tickets on the secondary ticket market are more expensive than on the primary side. In New York Yankees Mets game, certainly will be higher than what the primary ticket office charges. But 40% of 40% of tickets that we see are below face value. And that's incredible. I think that you can save money by going to the secondary ticket market.
Nice job. And the question is, I mean, we're in New York, so this is a huge market. But if you go to Pittsburgh, a family of 4 can go for less than $100. So, I mean, the amount of saving, I mean, you said like 10% a customer would save on a $250 ticket, you get $20, something like that. What about all the other markets?
I think $10 is a lot of money.
Maybe in Pittsburgh.
Not New York.
So first of all, the variance we see is higher than 10%. It's 40%, so it's significant. And yeah, sure, the Pittsburgh Pirates tickets aren't very expensive oftentimes, so it may just come out to be you're saving $10, $15. Again, we still think it's significant.
Wouldn't it depend on how the team does? I mean, like 5 years ago, the stadium was empty.
Yeah.
And so I would assume that how many people are driven to your site depends also on how the teams are doing and how their teams are doing.
And I think, just to reiterate what I just said, it's that ticket prices may be even lower than the primary side. I think everyone at their heart wants to save money if it's easy to do. And if you can save money going to the secondary ticket market, why not do it? And so I think that's sort of and it's kind of sort of a complicated answer to what you just said, but I think that this speaks to everybody, and yeah, it's a more acute pain that we're solving in markets like New York City, but even for your family of four in Pittsburgh, we can solve the problem.
Anybody else have a question? Feel free to ask the venture capitalist questions as well.
Angel investors.
I am really enjoying this. What is the best pitch you guys have ever seen that you wanted to write a check on the spot?
I was an early stage investor in something called LiquidNet, which is a wonderful off-market trading company. And all I saw was an organizational chart, basically in wires, because he was hard wiring everything. That was the difference about it. And said, what are all those things that you explained to me what the internet is? What the hell is that? No, those are going to be wires, and things are going to be wired to the backs of machines. And then he just paused, wait a little while, pause more. No questions. It's pretty good presentation.
I'll take a quote from David Hornick from August Capital, who said the best pitch in the world is the servers are melting, I have to go. Because you're already live and running and you need money to fund an existing business that's going. But the best pitch I ever got is I love it when I think I'm going to hate a deal, and then by the end of it, I'm there. You know, the headline deal, there's a company called Live Intent that we invested in that, you know, sounded a lot like pay per follow on social networks. You know, getting users, for example, like, you know, JetBlue has like 3 million followers on Twitter, and Virgin America has like 100,000. You can't catch up, ever. But, you know, pay-per-follow just sounds really sketchy, and it's not the kind of business I thought I wanted to invest in. The entrepreneur took me through, you know, how do you solve the discovery, how do you figure out who you want to follow, if you really want, you know, a good signal to noise on social networks. Worked through all sorts of analogies and really took me point by point and, you know, solved all of the problems that I had initially, and I was there by the end of it, which is hard to do.
About 3 long years ago, we had a company come pitch us called eJamming, and it was really sexy. It was the ability for musicians all over the world to sit in their pajamas in their bedrooms and jam together real time. We were blown away. How can you possibly deal with the latency issue? We wrote checks pretty fast for that one because to that extent we thought this was the one we didn't want to get away. And to that sense of momentum that this company was, you know, having out there, it was sexy cool. So they even asked me to come on as their CEO, so I came on as their CEO for 90 days. And then I found out what I didn't know. Then I found out that it was only for the MIDI marketplace. It wasn't for the real live marketplace, the holy grail, talking into a microphone. It was just a computerized part of MIDI. Oh my God, what did we do? Now it's been 3.5 years, and they've raised another $2.5 million, and they finally got Fender behind them. And now they're launching with Fender as a major music manufacturer. But by this time, our money has been ratcheted down because of all the new money that's come in to almost being worthless. But it was wildly exciting for that period of time. I ended up going to a concert or two because, oh, there's the eJamming people. They're very cool. They're going to let musicians, you know, play in real time in their pajamas.
Could have done more research. Russ, you should pick on him now.
Well, that's the thing about angel groups.
Res Rocket, Paul Allen funded that 10 years ago. He put in something like $18 million, got it up and realized that the internet will never get fast enough for people to actually be simultaneous, but they're going to get to it now. So you may still yet make money.
Well,
and
no,
Russ will be in your investment
we've been
group.
knocked down way too far, so it's not going to happen.
Okay, next question.
The right side here.
Thank you. My name is Eric Targan. First, great presentation on the ticket side, and thank you to the investors. Some great insights. I've actually been on sort of both sides of the aisle. I've raised millions of dollars for some businesses in the past, and I have some equity stakes in a number of small businesses. We're kind of doing it a second time. I'm just curious thoughts as far as raising capital. We haven't been in that space probably for about 10 years. And our current investors in the other business are sort of no longer in the online world. Any thoughts?
What's the question?
How much are you raising?
About 2 million.
What's the question?
Oh, just any thoughts about going back again? We've raised several $1 million before previous businesses, and about 10 years ago.
Do you have a business you're raising for?
Yes, we have a pretty amazing business.
Do you want to give a pitch?
We prefer being actually quiet about it, but thank you.
You're going to have to expose a little bit more at some time.
So
We're happy to expose
I'll
it
comment on that
privately.
right now. So you just totally blew an opportunity to pitch, because the whole idea, and you may have good reasons for it, whatever, but this is something that is a personal issue with me and too many entrepreneurs.
Sure.
I want to be quiet about my business. Great, well, you had 6 guys up here who are in the investment market, try emailing any one of us. I got 1,600 unread emails sitting in my inbox, and you had me right here. And you know what? No one else in this room really wants to start your business. You can give us the idea, but everybody in this room has their own idea, and they think it's better than yours, and you think your idea is better than theirs. So no one here is going to steal it. And even if they did, you can't have a business where just in hearing it, you can steal it.
I would agree, but with all due respect, there are certain businesses where first to market is extremely important.
Totally disagree.
Okay, fair enough. Okay.
Google wasn't the first set of chicken.
Hey, doing this one's for the angels and VCs in the crowd. Stephen Gumney, Northeastern University, entrepreneurship graduate. If it came down to it, and you had to pick, from column A or column B, would you rather a groundbreaking proprietary idea with, say, a mediocre management team, or a great team with just an average idea?
The latter.
I used to say that a lot. I said great team is always the most important thing. And I guess the older I get, the more I realize, it's very hard to change your business model and your market opportunity. It's harder. So I just want to qualify that to sort of say good ideas are actually harder to find to a degree. I mean, there are lots of I think there's a wide debate, but to generalize, I used to be in the other camp, but now I'm not so sure, and I wonder sometimes if our successful investments just happen to be the right idea at the right time.
Don't you think like this is a really good debate, I think, for entrepreneurs to have and investors.
I mean, I'm not saying don't get a good team, but it's a whole lot easier to get a rocking team around a rocking idea than having a C- idea and a great team. I mean, you're just going to drive that thing right into the ground. I've got in the companies that even a B, but we've invested and said, gosh, these guys, such a great team. The idea is kind of like a B. And we were just so impressed with the team. But the problem is that the business model is fundamentally B-ish, meaning it's going to be average. I'm going to get my money back with a great team. So I think there's a room to.
Wouldn't you say though that to me that you've miscategorized the great team, because the great team is going to make the adjustments.
Not if they have to become like a, I guess it's a matter of degree, but I don't think it's as clear cut.
I don't think it's a real choice, though. I mean, we have so many chances to make investments. I don't think I ever pulled the trigger when I don't believe both are there. I know I'm wrong the majority of the time.
Here's my point. Put a Cracker Jack team around a McDonald's, right? And then put a B team around a McDonald's. Which one's going to do better? Well, the Cracker Jack team is, but you still got a McDonald's, is my point. And you can make good money in McDonald's. I'm not saying, but on the margin, in our business, in the venture business, you need more than a little bit better. You need exponential. So I used to feel that management ruled everything, but I've just begun after I've lost millions of dollars in awesome teams and in B markets that or not made a lot of money. So I guess I just want to say it. I don't think it's as black and white.
There's something about what you're saying that I think I understand and I could relate to is that everybody who's ever pitched me has the best possible team. It's unbelievable. They have all of the exact right people to possibly execute on the plan. It's really hard to diligence who's a great team. I mean, unless you've done this exact business before somehow, which is like very rarely that happens. So you don't really know you have a great team unless the company's actually already executing. Whereas sometimes you do have businesses, and we've invested in some, that seem to be succeeding in spite of the team. That they've messed up over and over and over again, and yet the business is still training over. And those types of things are, that they might actually be great entrepreneurs. It's just once in a while do really stupid things.
Sometimes I think some of these teams succeed, and you think they're great only in retrospect, but the company just somehow succeeds despite themselves. It's just very weird. It's just, I don't know what it is. But
Seems like we're pretty split on this one. You guys want to move on to another question?
Okay, let's do one more question, and then we're going to wrap it up.
I promised one question here, so.
Hi, Michael Kaplan, thank you. Angel investors, and thank you. I had a question about your algorithm and how it would actually have an impact on the markets. Now you're saying that the algorithm accurately predicts prices for tickets in the secondary market. So when that happens, you're really providing information to investors, your market becomes more transparent and also more liquid. Won't the market find a way to immediately arbitrage your advantage away doing that business?
Yeah, I mean, so the question, a variant of that question that we get a lot is you're also providing predictions to both buyers and sellers. How could you do that? How can you provide both sides of the party with information? The thing about the secondary ticket market is that it's so incredibly fragmented that if we achieve the penetration such that we're influencing the way the market moves, that's the best problem in the world to have. That's like your servers are melting type problem. To get that kind of penetration, we're a huge business. And so we hope that we have that problem, and we're not terribly concerned about it.
Okay, this wraps up the Q&A portion of our seminar tonight. I just wanted to do one more thing, which was raffle off the two tickets to the Yankees that SeatGeek has kindly provided. Pardon?
Well, actually, Russell can take out of the box.
It is for Francesca Barak of Take Action Now, Turn Your Ideas into Profit.
That's me. All right.
You got tickets, right, an advertisement, and somebody just asked what's the face value of those tickets.
Thank you very much, and I'd like to once again thank our panelists. We really appreciate their contribution and their work. And thank you, Russ. You did a great job.